Hello everyone. With the RBI policy around the corner, the key question for market is simple. Will RBI prioritize growth or shift focus more aggressively towards inflation and currency stability? Let's break this down. As we head into April 6 to 9 monetary policy meeting, the macro environment has clearly evolved. The RBI is no longer operating in a purely domestic framework. External pressures are now central to the policy decisions. The most likely outcome is a status quo on rates, but importantly, this will be a hawkish pause, not a neutral one. Why? Because inflation risks are gradually rebuilding. CPI is expected to trend downwards towards 4.3, and crude oil remains the biggest uncertainty. In fact, a 10% increase in oil prices can add 40 to 60 basis points to inflation, which materially restricts the RBI's ability to ease. At the same time, growth is also moderating around 6.5%, but it is still relatively resilient. So the RBI is in a classic bind. Growth is slowing but not weak enough for rate cuts, while inflation risks are rising just enough to prevent a dovish shift. Now, what is different this time is the role of the rupee. Persistent FII outflows, elevated oil prices, and a strong dollar have kept INR under pressure. The currency has effectively become a key transmission channel for external shocks. However, unlike past stress episodes such as 2013, India's macro buffers, especially Forex results, remain strong. This allows the RBI to avoid aggressive rate action and instead rely on liquidity management, FX intervention, and regulatory tightening to manage volatility. With that being said, if INR depreciation becomes disorderly or inflation accelerates sharply, the risk of a policy surprise cannot be completely ruled out. So, the key takeaway is clear. Expect a hawkish pause with a strong focus on inflation and currency stability. For the Forex markets, this implies continued volatility, with the RBI managing sharp moves rather than defending a specific level. In this environment, global cues like oil prices and the capital flows will remain the primary drivers of the USD INR pair. Thank you and stay tuned for more updates.